Your next guest also believes the Fed may have to hike. Joining us now is Ed Yardeni, president of Yardeni Research. Ed, welcome.
Thank you.
And you're saying in some ways Warsh failed his first credibility test with the markets here. So explain.
Well, it's clear that the bond market is looking for the Fed to be more vigilant about inflation. And so the bond market, I think, initially was very pleased when in June and again in July, at the FOMC minutes showed, the FOMC statement showed that there's a commitment to price stability. And Warsh stressed that in his press conference in June and did it again yesterday. But at what point is he going to actually act? That's what the bond market's looking for. Otherwise, the bond vigilantes have the view that, well, if he's going to talk hawkish but not actually act hawkish, then they're going to have to continue to raise rates. The 2-year note right now says that the Fed funds rate should be raised 3 times.
That's quite something. This is the mirror image of what happened the first meeting. The first meeting, it was, he talked hawkish and, the market seemed to kind of take that at face value. Now they're looking for more clarity. And again, when asked multiple times, does this mean rate hikes? He seemed to not want to say yes. So what's happening here is not that people are saying you're being vague. They're saying, we don't think that you actually want to raise rates. Now we don't believe that you're actually going to do it. And as a Trump appointee with the midterms coming up, they're putting him to the test.
The only thing I can possibly imagine is that he did want to raise rates, but he didn't want to be a dissenter, and he couldn't get enough votes for a majority. But I don't know that for sure. But he certainly has talked tough. And if you pivot in June from easing to tightening as a stance, then I think by July you have to deliver. And the other thing is he's made it very clear that he acknowledged that the Fed has just been above its inflation target of 2% for, he quibbled over 63 months versus 64 months. So he knows that. So the statement was very definitive. We need price stability, but there was no follow through.
Can I ask a question which I hope isn't as dumb as it sounds? So I'm almost reluctant to ask it because just be nice. Just be nice on your answer.
I'll be nice.
Is there a scenario? You referenced the 2-year basically saying we've already raised rates.
Yes.
Is there a scenario where the Fed raises its Fed funds rate, its overnight lending rate, and bond yields vis-a-vis the bond market go down?
That's my view.
Definitely.
Okay, so
that's my
hopefully
view.
It's not. If it's dumb, then we're both
bring rates down.
Right. Exactly.
Because we just associate the Fed with higher interest rates.
Correct.
But if they were to raise, is the bond market saying, "Come into the light, Carol Ann"? It's a poltergeist.
Remember what happened in 2024? They lowered the Fed funds rate 4 times. 25 basis points each time, 100 basis points.
And yields went up.
I was against it because I didn't think the economy needed it. And the bond market agreed with me. My friends, the bond vigilantes, took bond yields up 100 basis points. So did the Fed really ease?